What's going on, everybody? Let me fix my chair. Welcome to the Thursday evening financial thing live. Hope you are having a good week. It's been an interesting week. I look at these financial markets and I'm just scratching my head thinking what is going on out there, but we're going to have a talk about that after we look at the peer-to-peer lending news and some things going on. What else? We're going to look at future live stream guests that, fingers crossed, will be coming on over the next couple of months. Going to try to get more activity in that department. It's not always easy to get the people that I want to come on the streams at the times that I want them to come on, but working on that. So we got some interesting guests who should hopefully be on in the next, I would say, September, probably beginning. Super excited about that. Yeah, I need to adjust the chair down a little bit. There we go. But yeah, I tell you, I'm looking at these financial markets just going, I don't really understand what's going on with them, and it's really baffling. You know, the people up there in those very high-ranking regards in the financial markets must know something, but I don't, because I'm seeing all these issues with the economies, with the inflation rate, and yet the markets just don't seem to care. And whenever markets don't seem to care, that's when the red flag warning sign should be going off. My friend always says a bear market wants to make as many fools as it can. So we'll see. Anyway, we'll talk about that a little bit later. So a quick shout out to everybody who is watching. If you are watching in the future, hi, welcome future self. Please subscribe to the channel, hit that thumbs up button. And if you want a shout out, just let me know where you are watching from. Let me grab some water. Alan is here, of course, in Basingstoke. It's a bit warm. Yeah. You know, the British people do like to have a little moan when it gets too hot, so I think that that's fair enough. The weather has been pretty hot. Is that the global warming we see going on? Colin Perry in the warm, sunny Peak District. Paul New is in Wales on holiday. In Wales, interesting place for a holiday. Peter Vince, of course, in Leatherhead, where it's sunny and dry, pleasantly warm if you're not working physically. Paul Bagworth is here in Kenilworth. Stephen Hale in sunny Nottingham. Alan Stratford is here in a very hot Worcestershire. Home of the Worcestershire sauce, I think, right? Is that correct? Well, in America they call it Worcestershire because they don't know how to pronounce English names, but it is Worcestershire. Of course, we know. Anyway, let's get into it. I'm just going to do a quick LoanPad recap. If you're a LoanPad customer, you will know that their Premier account, or their premium account, now has gone up to 4.2% interest from 4.1%, which came from 4.0%. So you're getting a bit of a bump if you're a LoanPad customer. That is all good news. Happy to see that. Every little bit helps against these crippling inflation rates that we're seeing right now. So let's look at the LoanPad statistics right now. We have 166 live loans. This number just seems to be increasing, which is a good thing if you're a LoanPad customer, because you see this company doing good things. We have a total loan value of $136.9 million. Based on a total security value of $156.9 million, which gives us an average loan to value of 43%. And average loan size £407,916. We've seen the lenders counts really increase. That means more people are signing up to invest through LoanPad. Average lender, this amount has gone up too. I remember when that was down in the £15,000 range, we're now at 17,000. Good to see that the estimated time to sell if you need to exit for some reason is less than a day. And we have 9 lending partners, so that has not changed. I think number 10 should be coming on board at some point. Interest coverage fund still at 42,000, and we don't have any loans that are covered by the interest coverage fund, which means loans are performing as expected. And we've had a total number of loans since inception of LoanPad, 330, and £61.7 million repaid. So definitely positive statistics continue to come out of the LoanPad platform. So very, very happy about that. Happy to see that bump in interest rate up to 4.2%. And I don't use the classic account anymore, actually. I mean, LoanPad money for me tends to stay there anyway, so now I'm using the premium account. I used to use the classic, and then I was thinking, well, if I'm not taking the money out, what's the point? I'm getting an extra percent or 1.2% interest on the 60-day access account. So I moved everything over a while ago. It's probably the way to go at the moment. There is 1.2% sounds a small amount, but it's definitely nicer to get that than 3%, especially where inflation is. Kuflink has unveiled a new buy-to-let and SIP product. So this new buy-to-let product is going to allow borrowers to refinance their original bridging or development loans rather than having to go to a bank. They will be offered a longer-term investment of 3 to 5 years based on an average loan-to-value of 75%, with interest paid monthly and the possibility of earning up to 3% per annum. This product is eligible for inclusion in the Cufflink ISA. So what is this buy-to-let lending product? Well, back in June, it was kind of announced that Cufflink would be looking to release this product. And so the buy-to-let product will only be offered to mature borrowers before being rolled out to a wider market, 3 to 5 year loans, with borrowers initially paying 4.9% to 6.99%. That reminds me a lot of Lambay's original product, which was issued to buy-to-let landlords who were experienced. I think they had to have at least 2 deals under their belt and had been landlords for a while, but they were being offered up to 10-year loans. So it looks like Cufflink is moving into that space, which I think is an interesting opportunity because I always thought Lambay were really onto something with that product. For anybody that owns buy-to-let properties out there, getting long-term financing of Lambay used to do up to 10 years at a fixed rate was a really interesting proposition. Now, Lambay didn't continue along with the peer-to-peer route, but continue to offer buy-to-let loans. So I think Cufflink has probably seen some opportunity in that space. And mature borrowers are good because they tend to be more experienced, which means they default less, and it would be generally considered a lower risk loan. Now, if Cufflink is charging the borrower, say 4.9%, 5% to 7%, what that means for you as a lender is obviously you're not going to make as much on lending to these people, because if Cufflink's charging 5%, chances are you're going to make 3% a year, which is definitely on the lowest side of the peer-to-peer scale. If you can get in on the 7% loans, maybe you're going to get 4 or 5%, which is a little bit better. But it is interesting that Cufflink is now offering that. The LTV, 75% is, definitely on the higher end, but not too sky high. And in addition to another feature that Kuflink has offered now, users can buy and sell select IFISA loans on the secondary market, a feature that was previously only available for select invest loans. So Cufflink continues to increase their product offerings and the things that you can do on the platform. Axia Funding, now if you remember this guy, Cormac Leach, he was on the podcast or on the YouTube live stream with us a couple of months ago. You can go check out his interview session that we had with Cormac. They have announced their numbers for the year ending 2020 2021. They made a loss of £337,000 last year, down from a loss of $384,000 to the year December 2020. So inching in the right direction is Axia Funding. It's definitely a niche product within the peer-to-peer space of legal financing. So financing things like lawsuits and whatnot. So Axia Funding still making a loss at this point, but losses are decreasing somewhat. Hopefully they'll be in a better space within the next 12 months. Shojin reports 35% increase in Asian investments. So Shojin, is one of these companies that we've seen started with the UK and then sort of expanded into this more global position where they had partnerships with Asia and other countries in the world, like Hong Kong, Singapore. So they are increasing their investments into the Asian sector of 35%. I kind of keep a watchful eye on that. I'm not as interested in investing in overseas projects because I just don't know enough about them, but we'll see how that plays out for Shojin. Interesting. Landi Tribunal hears of chaotic and toxic final days. So this was reported by the Mouse in the Court blog. There was a 4-day employment tribunal, whereas the ex-CFO Kieran O'Connor is pursuing a claim of unfair dismissal against Landi. He was asking for £6.6 million in damages, which includes compensation for loss of salary, loss of bonus, and $36,000 towards hurt feelings and embarrassment of the circumstances of his dismissal. The tribunal revealed that there was a laddish culture at the firm and the senior management were prone to angry outbursts. This is a company, and you will have seen it in the administrator's report, which is chaotic and called undesirable management styles. A lot of shouting and abuse thrown in. It just sounds like it was a real circus act going on over there, which is not surprising considering what we've seen as the outcome of Landi. And there's been some talks of some FCA dodging of the rules as far as what Landi goes. These are allegations, of course, innocent until proven guilty, but nothing surprises me that has come out of this court case situation. If you go over to the Mouse in the Court, you can actually read some of these stories that are happening through this tribunal. But the tribunal has rejected the £6.6 million claim. But they do find that the CFO, Kieran O'Connor, was a convenient scapegoat. Honestly, this whole administration with Landi, and Landi itself has just been a complete debacle. That I don't see anything good coming out of it now at this point, as legal fees, administration fees continue just to rack up higher and higher, and then more and more ridiculous stories come out. Nothing surprising here. We're waiting on Collateral now to pay out, this 5.1 or 5.5 million pounds in payments that they're going to pay out to lenders. It says this should start in a matter of weeks. We'll see what happens with that. Access Capital has reported 2022 lending peak in July So assets, if you're an assets customer, you will continue to see these emails coming through showing new loans that are available. But Stuart Law has said that year to date, July has been its strongest lending month. So that's good news. They have facilitated £25 million worth of loans in July. Stuart expects the business to exceed in future months as the firm returns to the levels it had seen during the pandemic. So I was just going to take a look into, should we do that at the end? I was going to take a look in the assets capital, just a couple of loans that have come up recently. Let me just log in, just to kind of see what the quality of those are like. We've seen such a dead period of time when it comes to assets that it's nice to see a loan flow finally after things just really not happening in assets for such a long time. So let's take a look at one of these loans that's coming up here. HH Norfolk Limited Loan 2, loan amount 1.68 million. So assets capital not messing around now. I do like they now have these lender and borrower rate transparency amounts. You can see exactly what the borrower is paying here and exactly what the lender is getting here. I think that's a good way to assess risk. So you can see the risk category on this loan is medium low. We've got a 46.34% loan to value. I really like that, the way that is laid out, because I think this is just super important. Some peer-to-peer lending companies do not put this kind of information right in front of your face, which it should be there. Absolutely. So we want to be able to see how much this borrower is paying, because assets is assessing the risk level based on what that borrower is paying, at least some of it. This is a refinance of a current assets capital loan with additional monies to acquire a closed pub, which will be converted into luxury accommodations. This company has been trading for 6 years, 5 months. They got a first hold charge over a freehold commercial property valued at $3.35 million. I do tend to think these values, not saying this is always the case, but as we've seen historically, these values tend to be a little bit inflated. Do your own research on this. We have a first charge on another commercial property at $275,000, and then some corporate guarantees, which I usually don't think really are worth very much at the end of the day. So interesting loan offering there. I think there was another one. Okay, let me pull it up. Let's see what else we got here. Here's another one. We have Trevelyan Apartments, $157,000 of a total facility of $611,000. You can see the difference in the interest rate here. 8.65% is the borrower rate, and you as a lender were at 7. 69% gross development value, term of 9 months. Is a conversion of a former guest house to 7 one-bedroom apartments and a 1-bedroom in the basement. This borrower has been trading for 1 year, and you can see the charge of the first charge loan down here on this commercial development. Usually businesses that have been trading for a lesser period of time do tend to end up paying more interest. As you can see, this one is at 8.65%. So yes, these loans, they're coming out every week. I see new loans coming from Assets Capital. So that's a good one. You can look at the valuation report too if you are an Assets Capital investor. I tend to skim through these things sometimes, but not all the time. But it's good to have those valuations there so you can check them out. if you choose to do so. So speaking of collateral, yes, this payment, if you have not been following this collateral case, these two Curry brothers are now under criminal investigation brought on by the FCC for alleged fraud. This was an article in the Telegraph back in January, really kind of giving a summary of these two brothers that ran Collateral, Peter and Andrew Curry. It turned out the FCA did not authorize this business to be running, and Collateral really advertised the fact that they were FCA authorized. They put on these claims that they were going to pay up to 12% a year. It turns out, this was all a big mess, alleged fraud going on. Now some of these monies are being recovered, but looks like probably only a fraction of outstanding money will be returned to investors. These guys are going to see their day in court, I imagine, soon enough, and probably going to regret anything that they've done that has not been above board. It looks like there have been some things that have not been above board. Taking advantage of people like that is not a good thing. We don't like to see that. It's really a shame. Really a shame. People, I think people who steal from others are just pretty much pond scum. The lowest of the low of people. Not the lowest, not the very bottom of the barrel, but they're lurking in that close to the bottom of the barrel. And so I really hope that these guys, if they have done something untowards, which it seems like they have, that they will be punished accordingly and not given some 3-year prison sentence at Club Fed where they're sipping on orange juice every day, fresh squeezed. Because some of these anyway, I don't want to get into that, but you get where I'm coming from. Now let's talk a little bit about what is going on economically. There was one other thing too. This platform here, I've kind of been doing a little bit of research on the money platform. I did look at this peer-to-peer lending company a couple of years ago, and they seem pretty interesting. I just don't know how I feel about them right now, but I'm doing some more due diligence on this. The money platform is basically a way for people to borrow money on a short-term period. Problem is with this type of lending that your interest rates can be absolutely huge. This one, on an example, is 255% per year. So these things are not designed to be long-term loans. These are for consumers who need to borrow money for a couple of weeks, or a week, or 4 weeks. Get the money, pay it back. You can lend money as a investor to this company. For example, if you lent $1,000 for 4 weeks, you're going to get about £1,098 back, which is 9.8% in 4 weeks. So it's pretty extensive about the returns. You can make 0.7 to 0.8% interest a day. You do a 12-week lending, you can get about 22.4% back in 12 weeks. So it is interesting. What I wanted to know about was, what is the loan statistic book like? And I did actually try to get some statistics. And I'm going to see if I'm able to do that now, because when I tried before, this is what happened. There's a platform statistics button here on the on your dashboard. I do have an account set up. I haven't verified it yet, but this is what happened when I try to get the platform statistics, and it's still happening around. So the page is not working. But I wanted to look more into that because it looks like an interesting platform to me. It'd be nice if that worked, but it doesn't. So I do have a little bit of a moral dilemma when it comes to this kind of lending, because you're seeing the types of interest that are being charged. I understand that people get into problems and they need money short term, and in order to get money short term without having to jump through too many hoops, you are going to have to pay for it as a borrower. So there is that, but it's It's a lot of interest that people are having to pay. But I'm going to check more into that. And I have actually reached out to George Huntley, who is the CEO of this company. And I think I got his name right. Oh, look, over 20s only. So I've requested for him to come onto the stream and for us to do a Q&A session about this this company called the Money Platform. So I don't know if any of you are invested in Money Platform. Let me know how your experience has been. Speaking of future guests, we're going to do a quick rundown of planned future guests in the next couple of months. I need some kind of a fanfare for this. Dun, 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 dun. This is the future live stream guests, fingers crossed edition, because, you know, I do try to invite people who I think are interesting, who are doing good things onto the stream. Sometimes they accept, sometimes they tell me to give me the two fingers. But most of the time, people are very open to coming on the stream. So, who do we have lined up, fingers crossed? First of all, Mr. David Bradley Ward of AbleRate said he is open to coming on the stream. As you know, AbleRate is now in voluntary wind down, so I thought it'd be good to get David to come on the stream, kind of explain what's going on with AbleRate, what happened, let him present his side of the story. I've tried to give a pretty balanced view of AbleRate and what I think happened, but David is open to coming on the stream, so I'm in communication with him to be here over the next probably in September. Next, Punk Money. This is a new company that is going to be launching soon. I've invited CEO Ewan Dickey, who said he would be interested in coming on the stream to tell everybody what Punk Money is. And I first learned about Punk actually from Robert Pascoe, who runs Plend. So I did a little bit of digging into Punk Money. It looks like an interesting project, so I've offered Ewan Dickey to come on and be a guest. Thirdly, LoanPad CEO Louis Schwartz is going to be coming back on to the live stream soon enough to kind of talk about where LoanPad is heading, his thoughts on the general peer-to-peer lending landscape. As you know, I'm a big LoanPad fan, so I'm always glad to have Louis come on. It's been a year, I think about a year since he's been on the stream, so it'd be good to have Louis back. Louis, if you're watching, come on back. We got the Money Platform. We just spoke about that. CEO George Huntley said he would be happy to come on the stream, so looking to get him scheduled in for September, so you know we can all learn more about that peer-to-peer lending platform. Folk to Folk, I've been in communication with these guys. They're a pretty big lending platform, and one of their representatives has been in touch with me about having one of the managing directors or the CEO come on the stream. They're away on holiday at the moment, so we're just trying to line up a date when they get back and things get settled. Hope to have a Folk to Folk suit on here soon. And then, is that it? I think that's it. So that's who we got scheduled out, hopefully for September, possibly October. I may take a holiday at the end of October, so there may be a couple of weeks of no streaming, but we'll see about that. We're going to do a little bit of crypto news here. Crypto-backed peer-to-peer lender processes 10,000 credit scores in a month. This company called Rockify has minted 10,000 decentralized finance native credit scores in just over a month. You probably have no idea what that means. I'm not sure I even know what that means. There are a bunch of these companies out there who are doing decentralized finance projects. When you go on it as somebody inexperienced, you know, I consider myself to be pretty inexperienced, but if you're inexperienced, you're probably looking at this going, what is this? Like, what does this even do? So apparently you can calculate a credit score using this decentralized finance app. And then I think you can lend money to people. So basically they're getting their credit scores calculated out by this decentralized financing app, and then they're looking to borrow money. You can lend money to them. You get paid, I don't know, different types of interest rates for different periods of times. It looks like a pretty interesting project, but again, it's kind of complicated, and who knows. Oh, and be careful. There's a lot of cryptocurrency scams out there right now. You probably get emails. I get texts all the time from those random people who, let me see here. Let's see if I have one recently. I get probably 2 a week. Where is it? I just got one this week. There we go. I'll show you an example. If you get a text like this, I don't know if you can see that, but basically it's just a random person and says hi, and that's all they say. Hi. And then if you actually start chatting to this person, I've done it because I like to always know where these scammers are coming from. But basically they'll pretend like they message you out of accident, and then they try to get you involved in a cryptocurrency group on Telegram. They're usually coming from Asia or Africa. And yeah, their goal is to try to scam you out of your money. So if you get a text like that, or it says, hey, this is Gerald, it was great meeting you last night. Looking forward to it again. You're like, Gerald, who's that? They're just trying to initiate contact, trying to build rapport with you, and then the scammers will try to strike from there. So be very, very careful with that, because scams are afoot. So let me show you the Trading 212 account. I was thinking about a week ago how difficult things have been in the markets, and how I've just not made any progress with my goal of increasing this account and getting it above the £20,000 range. Alas, so the last couple of days we've had some success in the account. Some of those investments that were heavily in the red, we're right back now to £18,786. Remember, we started at £5,500 with this account. So the last, I think we were down here at about, let's see, the last week, see, in the low 16,000. So come all the way up to close to 19,000 in the last week, which has been good. Arch Resources was way in the red. We were, I think, 15% in the red. So that has had a massive day today, 7%. Yesterday had a good day. Synovus, we're just eking over into the green now at 4.32%. That is CVE. Flex, we had a good natural gas report today of demand increasing. So you know what's going on in Russia, with they're going to be cutting off supply apparently. That's the threat. So natural gas has been rallying. We're up about 40% on that investment. International Seaways up 31%. Vermilion Energy up 46%. And then Zim Integrated Shipping has been one that struggled with down 20%, but that's kind of a, it was down here at 49, we're up to 53, so probably just going to hang on to that one for now. And this very much more concentrated portfolio has taken the swings, being very heavy into obviously commodity or coal, energy, and then shipping. You're going to see those swings. So hopefully this account value will continue to go higher. Now, I'm very, very confused about what is going on in the financial markets at the moment. If we go back looking at the S&P 500 on TradingView, is saying a buy now on the technicals, but we were down here just in June 17th, so not that long ago, and 3,693 in the S&P, and we've come all the way to 4,209. Now we've seen a higher 4,800 in the S&P that was reached, so we're not that far off of the high. But if you look at really what's going on in the economy, it's just kind of crazy. I mean, in the UK for June, we saw an inflation report at 8.2%. The US, of course, we saw go as high as 9.1%, and now it's come back down to 8.5%. That was a report of the CPI inflation numbers on Wednesday. And the markets, they ended up rallying. If you look at the 5 days, so what are we, the 9th? So if you looked at this rally that we had on the 10th, this is when those inflation numbers came out. And you'd think that there was some kind of a euphoria going on in the markets to create this rally. Yes, inflation did come down from 9.1 to 8.5%, but we still have a massive inflation problem. 8.2% in the UK, 8.5% in the US. This is a big problem. And what's going to happen is wages are going to have to start going up because people are having to pay more for everything. As you know, you've probably been to the supermarket, you've seen the prices increase, petrol is increasing. Rents certainly have gone up in the local markets, pocket markets of the US and in the UK, and then housing prices starting to increase. We are starting to see a cool off in the housing market where there isn't this buying frenzy where people were putting in multiple offers on houses. Home sellers were getting 10-15% more than they were selling the house on. We're seeing that start to cool down now as interest rates start to rise up. But if this inflation rate is still a problem of 8.5%, now what happens is companies are going to have to start paying more to their employees because they are not going to be able to survive. Of course, when you pay more, you make less profit, earnings come down. And then obviously the stock price would come down. Well, we're just not seeing that play out yet. I don't think it's quite arrived. I don't think the market has caught up yet to the issues that are still very prevalent, not only in the UK, but in other parts of the globe. And I just don't really see how this rally in the market makes a lot of sense. It seems like a very false rally, and I could see definitely a pullback in the S&P 500, also in the FTSE, as those companies start to report profits future down the line that are lower because they just have more expensive. They still got the supply chain issues. Costs of goods and services are also going up. Interest rates going up is costing companies more to borrow money now. On a consumer standpoint, you want to get a mortgage, you're paying more on a loan now on a mortgage rate. So everything is pointing to a big stink, right? Everything is stinky, but the markets are not stinky. Why is that? Nobody really knows. I think there's just this level of euphoria that people thought, oh, the inflation rates come down a little bit. We're euphoric. There's nothing wrong with the economy, but I just don't see it. I see problems, big problems out there. Unless the government start printing money again, start doing the quantitative easing, which they're not supposed to be doing. They're supposed to be doing quantitative pullbacks, stop putting money into the economy. Unless they start printing money again, I just don't see this stock market rally continue. So what would be the smart move? Well, I don't know. I don't have a working crystal ball. My crystal ball has been broken for years. My conservative side would be to say, I probably should be sitting in cash and not taking this risk, not playing in these markets right now and just letting these markets correct. But my gambler side, as you know, I'm a gambler, is saying let it ride. I can't stand to sell things when they're in the red, especially deep, even though I could take a bit of a tax loss on that. But for this, and certainly don't do as I do. Do your own research. But I'm just going to hang on, kind of keep an eye on the markets and let this thing ride out, see what happens with it. So that's my take on the markets at the moment. I think that things are a little bit crazy. This rally is just, I don't really understand it. Inflation's still high, yet the technicals are saying buy the S&P. There are some people, if you go to a website like TradingView, you can see this article here. It says highway to the danger zone. This guy says the report of the inflation CPI numbers in the US triggered a massive rally. If the stock market bulls think this means inflation is dead, they should look at what happened the last time the US economy suffered high inflation. It took nearly 13 years to lower inflation. So I think that's a really smart analysis. I think that people are just euphoric, and I think it's a false run in the markets. But we shall see. I don't get it right all the time. Certainly not How long will we be going for? 44 minutes. Okay. Probably going to wrap it up. Hi, Dave Dawson. Is anyone considering Cufflink's buy-to-let with 60-75% LTVs when it only pays 2.5% for a 3-year and 3% for a 5-year? Sounds way below the going rates. I agree. It's pretty low, but I guess you have to assess the risk factor, on it. But it's certainly not the most attractive proposition out there. I mean, when inflation's 8.2%, investing at 3% just does not seem that good, right? Alan says, I'm liking Crowd to Fund and Lemwise at the moment. Unsecured loans, personal guarantees, but 11 to 13%. Yeah, if you want to really take a swim for the fences, look at the money platform. I mean, you're making 0.7 to 0.8% per day. What do I think about Coinbase and their latest poor results? I moved my money off of Coinbase a few weeks ago thanks to some advice that I had received. I don't know. I don't think it's a good stock to own. All I think about with these crypto platforms is, can they survive? Do they have enough money to survive? Coinbase is well capitalized. I mean, look, the basic fact is that when cryptocurrency does well, companies like Coinbase are going to get more users buying crypto, paying the fees. Stock will do better. When crypto's in the doldrums, as we are now, as we have been, I think we're seeing a bit of a cryptocurrency rally, but it could again be another false up, and I wouldn't be surprised if it pops back down again. Coinbase is going to suffer during those times, so that's what you're seeing with the poor results. I've been interested in when and where you, Lawrence, last invested in peer-to-peer lending. I think the last company that I put money into was Crowd Property. Yeah, so I mean, I basically maintain most of my investments. I've been pulling out interest from nearly all the platforms on a monthly basis now. I'm not increasing my peer-to-peer lending allocations at the moment, but I do want to start dabbling into a couple of different companies out there. When I do that, I will certainly let you know. Talking about crazy energy prices of $5,000 a year, crazy. Yeah, I mean, that's one of the reasons I just see the sector of energy being a good place. Again, not financial advice, but if we see all these signs of energy prices continue to rise up, my common sense says invest in oil, invest in natural gas stocks. But again, there's a risk involved, so be prepared. Can you add Cufflink to your invite list? Yeah, I can. Yeah, I could get Narinda to come on and have a chat. I'll put him on the list. Anyway, that's going to do it. Hi, Candice. Norsesian. What a cool last name. Candice Norsesian. But yeah, I'll invite Cufflink. That's going to do it this week. Hope you enjoyed the stream. Please subscribe if you're not a subscriber already. It helps out a ton. Hit that thumbs up button. And I will see you most likely next Thursday. Have a wonderful weekend. Enjoy that hot British sun. Grab one of those cornettos. Remember? Give me cornetto. Give it to me. Delicious ice cream. Something. Anyway, that's all I got for you. Take care. Bye.